Well, U.S.-China trade flare-ups and increased bets for a Fed rate cut have sent gold prices soaring. The precious metal trading above 4,200. Blue Line Futures. Phil Streible joined us to weigh in on the next moves. Phil, great to see you on set, especially, my friend. Let me ask you this big picture question. I want to start U.S.-China trade tensions. They're ratcheting up. You saw Treasury Secretary Bessent, Trade Rep Greer, not happy, Phil, criticizing Beijing, specifically not happy with Beijing's decision to curb exports of rare earths. I'm curious to get your take on how you see that. Specifically, just walk me through, as a trader, how you're navigating all that.
Well, when you look at the rare earths, you look at these different commodities, and what the commodities do is they fuel defense, energy, AI, and technology. Without these rare earth elements, you're unable to produce any of these things. I Google searched and look at AI and saying, hey, can we survive as a planet without magnets? And that's where a lot of this argument is. If you don't have these magnets, you can't create energy. And without that, you're going to see technological advances just not happen whatsoever. Inside of this studio, there must be thousands of things that are running on these magnets. And that's where the argument lies on us getting these magnets.
Let me switch gears. I want your take on precious metals. Let's talk gold specifically. Here's what B of A says, and obviously it's been a run. It's an 8-week streak of gains for gold. B of A sees the risk of correction near term, Phil. Then they tell clients, though, still further upside in 26. Is that how you see it?
It's the volatility is where they see this possibility for correction. You've got about a $90 average true range, meaning that gold is moving about $900 on the 10-ounce contract per day. So you look at gold's up about 50% year to date. You've got 17% a changeover in ETF flows. So coming in year over year, we're getting much more active in this. What's happening is people with traditional 60-40 portfolios, they've been left in the dust over the past few years. It's important for them to start incorporating slivers of commodities into their portfolio, whether it's gold, oil, Bitcoin. And what it does is it allows them to perform better. So it's the widespread adoption from not only the individual investor, but also central banks continuing to add.
Can I ask you, when you looking at gold, what are the levels you're watching?
So 49.37, that would be the recent swing low that we just saw. That would be a little bit alarming if we break below that level. Realistically, the way this thing is charging higher, Bank of America with a $5,000 price target at the end of 2026, the reality is that we could just get there in several days. If you look back at the breakout, which was September 1st, that was above $3,500, and look where we're at right now, $700 higher within a month and 2 weeks.
Silver, I want your take on that one. Again, B of A, I'll give you a take. They see that when they told clients potentially rising to 65. Is that what you see?
Yeah, the possibility is really there. You've got a number of different dynamics. It's up 70% year to date. The silver market is only, the market cap's about 50 billion. You look at gold, it's 450 billion. So it's 9 times smaller, and that's where the volatility takes place. You've got 5 years of structural supply deficits, meaning the mining supply just isn't there. And you've got the demand constantly increasing, everything from EV, solar. Solar is tapering off a bit, but countries like China are really starting to try and become energy independent, and that's where they need silver and some of these different elements.
So the reasons driving silver higher, different than gold in some respects?
Oh, definitely. Yeah. And plus you've got the investor demand that's coming in there. It's that poor man gold mentality. Now it does have the risk, and it does attract the type of person that chases after something like Bitcoin, something like the meme stocks. Silver's the next one. They dream about getting rich on these things. Where the gold market has this structural supply where you have central bank demand adding to that support there. The problem with silver, the only one that I would say, is that you have the possibility where you have substitution risk, where if prices get too high, you produce solar panels, you might start incorporating more of a copper paste or an aluminum paste instead of silver. So it does face that type of risk.
Platinum and palladium, I want your response there too. Macquarie saying, here's their take, PGM prices could see a pullback, they told clients, but they think the dip gets bought. Prices make new highs during Q1. Is that what you see?
Now the problem that occurred was that prices of gold in jewelry and watches, it just became too great. So what happened is in China, they started looking at inexpensive ways to have great jewelry, and they started buying platinum, and that's where you saw that breakout over $1,000 an ounce, and it's really taken off from there. It's up near $1,700. Your level of support's $1,500, and you also have palladium, where getting these things online, getting them out of mines and extracting them, a lot of these countries that do that are using it for negotiations towards different trades and tariffs.
Finally, let's touch on the energy complex. Gasoline prices, we're nearing the $3 threshold as oil prices tumble. I'm just looking at WTI, Phil, 58 and change. Where does it head from here?
This is why we have the afterburners going on in the U.S. equity markets. You've got growth right now. You've got declining inflation with these energy prices coming down, as well as lower agricultural prices. I really believe that they want to see oil in those low to mid 50s. So 55 to 52, I think, would be a great level of support. There's no telling on natural gas, where they've been building these inventories, what the weather is going to bring when it comes to the winter. But we do have ample supplies, and that's why the futures are breaking below $3.
Phil, great to see you. We're lucky to have you on set. Thank you, sir.
Thanks a lot, Josh.
Well,